Hi everyone, I'm Cheng Fu Lin and I'm excited to share my final year project. It's a web-based stock prediction app built using machine learning. Technology today has made access to financial data easier than ever. From market charts to trading apps, investors today are better equipped to understand stock behavior, manage risk, and seek higher returns. Despite all these tools, many Malaysians still face uncertainty. With rising living costs and stagnant wages, the desire for financial security has never been stronger, yet it's harder than ever to achieve. So, what's the problem? What's really holding investors back? Most tools, such as TradingView and Yahoo Finance, they focus only on the past, analyzing historical prices, but they don't actually predict where the market is going. Besides, the majority of machine learning research in finance focuses on US and global markets. Malaysia, still underexplored and lacking localized solutions. Also, hyperparameter tuning is often assumed to improve model performance, but it isn't always that straightforward. While Bayesian optimization is popular, it's not always the best choice. Different models and data sets behave differently, so tuning needs to be adapted on a case-by-case basis. Moving on, small cap versus large cap, a debate that's been explored and researched. Some studies suggest small cap stocks tend to outperform large cap due to higher growth potential. But is that really the case in Malaysia? Especially within the banking sector, which plays a central role in the local stock market? The answer isn't clear, and investors are still left guessing. And finally, what about external indicators like the KL Finance Index? While many studies use benchmarks like the KLCI of S&P 500, the KL Finance, which is directly tied to Malaysian financial sector, is rarely explored in predictive models. Some believe it could improve accuracy, while others argue it introduced more noise than insight. So, is it useful or just irrelevant? That's still an open question. To address these problems, my research set out to explore and answer 5 key questions. The first one: how well do different machine learning models like random forest, SVR, and ANN perform on Malaysian banking stocks? Second, which tuning method work best? Grid searched, random searched, or Bayesian optimization? Third, can the KL Finance Index improve prediction accuracy as an external feature? Fourth, is there a performance difference between large cap and small cap bank stocks in Malaysia? And finally, can we build a web-based stock prediction application that's actually useful for Malaysian investors? So, let's break down the models I used. The first one, random forest. Think of it like a panel of stock analysts. Each model gives its opinion and together they vote on the final outcome. Moving on, support vector regression. It's brilliant at cutting through noise to find the real trends, especially in chaotic markets. And lastly, artificial neural network. It's a powerful and adaptive model like a brain, but sensitive to how it's trained. Each model brings a different strength to the table, which makes comparison essential. Other than comparing to baseline model, to get the best out of each model, I applied 3 tuning strategies. The first one, researched. It tries every possible combination. It's exhaustive and slow, but great for small problems. Next, we have random searched. It takes random sample of hyperparameters. It's much faster and often surprisingly effective. And lastly, we have Bayesian optimization. It learns from previous results to suggest better combinations over time. It's smart and adaptive, but also computationally demanding. To begin, I collected historical stock data from Yahoo Finance and Investing.com, covering a 10-year period from January 1st, 2014 to January 1st, 2024. The dataset focused on the top 10 small cap and large cap banking stocks in Malaysia, selected based on market size and average trading volume using TradingView as the ranking reference. Once the data was collected, I moved into the pre-processing stage. With the data prepared, each machine learning model, random forest, support vector regressions, and artificial neural network was trained and tested both with and without the KL Finance Index as an additional input feature. To evaluate how well each model performed, I used 3 key metrics: mean absolute error, MAE. Also, we used root mean square error, RMSE. Lastly, we have R square. Evaluations were carried out for both baseline models and tuned versions across both large cap and small cap banking stocks, allowing for a fair and comprehensive comparison. Looking at the baseline model performance without the KL Finance Index, the results are clear. SVR consistently outperformed both RF and ANN across all tested banks. The chart shows that SVR achieved the lowest MAE values for each stock, highlighting its reliability. For example, it delivered particularly strong accuracy for MBSB per heart with an exceptionally low MAE of 0.0074, and for BIMB, where it recorded an MAE of 0.0229. These consistent performance is largely due to SVR's ability to effectively capture non-linear patterns and filter out market noise, two key challenges when working with financial data. These results set a strong foundation before tuning, clearly positioning SVR as the most accurate baseline model in this study. As for large cap stocks, random forest shows strong improvements after hyperparameter tuning with random searched, delivering the best result in both cases with and without the KL Finance Index. Without KL Finance, MAE dropped from 0.0680 to 0.605. RMSE improved from 0.0916 to 0.0821, and R-square increased by 0.0231. With KL Finance included, performance improved even further. MAE decreased to 0.0596, RMSE to 0.0808, and R-square rose to 0.221, the highest among all scenarios. These results highlight the random forest benefited significantly from tuning and, unlike other models, also gained value from the KL Finance Index as an external feature. While random forest improved with tuning, the same couldn't be said for other models, especially on small cap banking stocks. For SVR, performance actually worsened after tuning, indicating that its default configuration was already near optimal. As an example, it is observed that MAE for SVR baseline 0.0231 rose to 0.0233 after tuning, and for ANN, tuning led to instability and a noticeable drop in accuracy, likely due to overfitting, which small cap data is more sensitive to. These results highlight a key takeaway. Hyperparameter tuning does not always lead to better performance. Different models respond differently to each model, each methods, and in some cases, tuning can even harm accuracy. And this confirms that there is no universal best tuning methods. It depends heavily on the model type and the data characteristic. Last but not least, let's look into the impact of KL Finance data on baseline and tuned model performance. As for baseline, KL Finance Index had minimal effect on random forest and SVR. However, it negatively impacted ANN, especially for small cap stocks, where R-square dropped by over 2.5%, indicating reduced prediction accuracy. Also, as for the KL Finance data on tuned model performance, RF improved the most with random searched, especially for large cap stocks, while SVR remained unchanged. And for ANN was inconsistent. It improved slightly with Bayesian optimizations, but had a significant performance drop with BO on small cap. All of this suggests that KL Finance may introduce noise in more complex and sensitive models like ANN. Now, we have finished our research part. Let's move on to our application. The system starts with a user interface, where users select a stock and request predictions. And the Flask backend handles the request, retrieves historical data from Yahoo Finance, and runs predictions using random forest, SVR, or ANN models. The results are returned and displayed in the form of forecast graph, historical trends, and model performance, all within an interactive, user-friendly dashboard. Now, let's take a look at how the application works through a live walkthrough. This is the homepage of the web-based stock price prediction. User can start by selecting a sector with up to 20 sectors available, and then they can choose 5 stocks within each sector. After that, they can select a machine learning models, start date, and also time frame, and run to predict a future stock price. Users can view how each model performed during testing. The application displays key metrics such as MAE, RMSE, and R-square, which helps indicate how accurate the predictions are. The users are allowed to view the description of each of the metrics used. While on the info page, the user can view and compare the 3 machine learning models used in the app. This comparison helps users to understand the strengths of each model before choosing one for prediction. And lastly, there is the stock info dashboard where users can explore detailed information for each of the stock. Users can choose the stocks and sectors and users can view price changes, percentage movements, and identify top-performing stock within the same sector. It also displays previous closing price, market capitalizations, and other key states. Users can switch between different time frames such as daily, weekly, monthly view, and visualize trends through interactive lines or candlestick charts. In a summary, SVR gave the most reliable results, especially for small cap stocks, due to its strengths in handling non-linear and noisy data. However, tuning didn't always lead to better outcomes. While random forest improved significantly, but both ANN and SVR saw performance drops after tuning, proving that tuning is not guaranteed to help and in some cases can actually reduce accuracy. And these reinforce a key insight. There is no one-size-fits-all tuning methods. Each model and data set responds differently. While the KL Finance Index added little value overall and even introduced noise in sensitive models like ANN. Although the web app functioned well, future prediction accuracy is limited, especially outside the banking sector, highlighting the real-world challenges of stock forecasting with basic models and limited data. Address these gaps. Future work will focus on adding sentiment and new analysis using NLP, building sector-specific models for more accurate, domain-driven predictions, and applying explainability tools like Sharp and Lime to make the models more transparent. We can also explore more advanced forecasting models like LSTM and further enhance the app user experience and interface design. Thank you for watching and taking the time to explore my final year project. I hope this research contributes meaningfully to smarter, data-driven investing in Malaysia.